This is the briefing for Friday, January 30th. In last night's briefing, I talked about the exhaustion candle that we saw, or that I saw in the charts yesterday at the close. And basically, this is the exhaustion candle I was talking about, where you get a move to the downside in this case, and then buying steps in and quickly retraces that. So you get this buying candle that's seen right here on high volume, and you can see that it's pretty high volume right there. Same thing happened in the Qs, the same thing happened in the Russell. Now that typically would be a bullish indication, and certainly we got a rotation up yesterday going into the close. And then of course today we had this basically rotation with a slightly downward momentum to it. And I talked about it last night, was that the buyers who bought this so aggressively after sellers exhausted themselves, if you trade much into that buying candle, that buying wick, that suggests that those buyers are not going to defend that price, and it's going to get retraced and becomes a bearish indication once it's retraced about halfway, which would then indicate that that this was not exhaustion on the part of sellers, but that there was just a counter trend rotation back up to this move to the downside. And I don't want to get too complicated here, but you can see we traded into it somewhat, but not really to that great of a degree in terms of the spiders. The Qs, we did just the opposite. We traded almost all the way through it, which suggests weakness potentially coming into the Qs in Monday's trading. And in the Russell, the IWM, you can see we completely retraced it at the open. So there was much more weakness showing in the Russell than there were in the other indices. Now it's going to be important that the low from yesterday holds. So in the spiders, it's going to be about the 684.72 area, and in the Qs, it's going to be the 618 area, and in the Russell, it's going to be the IWM is going to be right at this 258 level. Excuse me, which was the low for today. Now you can see that this move here and this move here, which was somewhat to the downside, was really done in a lot of volatility. So you can see a lot of buying candles and a lot of selling candles here, buying wicks and selling wicks here. Same thing with the Russell, the selling wicks and buying wicks here. So a lot of volatility, and that indicates that it's a market where traders are unsure as to whether value is going to be higher or whether it's going to be lower. The one concern that I have in going forward is that the internals appear to are beginning to deteriorate. Now this is an hourly chart of the spiders, and you can see this rotational period that we've been in, second rotational degree of time, and a third rotational degree of time, which we're now testing that upper extreme, which is going to be very, very important if there's going to be a breakout. But typically, if you're at an upper extreme like that, you want to see the internal strengthening as you test that extreme. That would give the market the gas or the fuel to trade through that resistance level and begin a new breakout move. And you can see here, volume has been fairly low. Volume ticked down slightly in the spiders today. 52-week highs minus 52-week lows are declining. Now we're at a negative 132. We were fairly positive about 700 shares going back several days. Breadth is declining, and net volume, which is most concerning, is declining as well. Looking at the Qs in terms of the NASDAQ, you can see that we've tested this sloping trend line here, and we tested the upper extreme of this area of rotation 2 days ago. So this is going to be very interesting to see if we get a lower low on Monday below today's low. That's going to open up the potential to trade down to this low, which comes in at the 606 area. And then, of course, that would open up trading down to the lower extreme at 585. You can see breadth is declining and declining pretty dramatically, and it was declining going into this high, suggesting that weakness was coming in. There was not enough strength in this market for it to break out to new all-time highs. Net volume also declining, pretty negative in today's trading, as you can see right there. And in the Russell showing much more weakness. It had shown more strength. You can see the breakout above this area of rotation, which would equate to the two areas of rotation I just showed in the spiders and in the Qs. Broke out, traded up. We had an island reversal here, which is a very bearish move. And then, of course, you can see this move back to the downside. And it looks like it's getting ready to test the breakout point, which is this 255 area as well. Breadth down, net volume down also. Looking at where we are in terms of overbought and oversold, the NASDAQ is approaching an extreme oversold condition, not so much in the NYSE. And then in total volume, you can see total volume on the NYSE was up in today's trading, but it was up. Look, the breakdown of that volume is negative net volume, and the same thing with the NASDAQ. You can see volume increasing, but then net volume absolutely collapsing, and a pretty big negative number. So most of this volume increase that we're seeing was selling volume that was coming into the market. The other thing that I'm a little concerned about going forward is the percentage of stocks above the 20-day and 50-day moving average. This is the 20-day moving average, and this is the 50-day moving average. And you can see what's been happening, the decline that's been occurring in the 20-day moving average and in the 50-day moving average for the S&P 500. In the NASDAQ, you can see what's happening here. NASDAQ is even more exacerbated. This is percentage of stocks above the 20-day moving average, and this is percentage of stocks above the 50-day moving average. And then, of course, in the Russell, you can see it's even more. It's declining even more. This is the percentage of stocks above the 20-day moving average and the percentage of stocks above the 50-day moving average. So the internals are not giving a lot of hope to this market in a turnaround. Now, that can change, and certainly it can change with a news event, which would be the fuel that the market needs to, one, turn around and start heading higher once again. And then, of course, there is the possibility that the price could change, and then the internals would begin to build slowly to support price moving higher. But unless or until that happens, I'm concerned that we're looking at potentially more of a bearish analysis of the market, or the potential for a bearish analysis of the market going forward. Have a great night, and I'll pick this back up on Monday for subscribers.